How's it going, everybody? It's Stas here, and in today's video, we're going to be talking about 3 stocks that I would never sell. 3 stocks that I feel comfortable holding in my portfolio for a very long time. I'm talking decades upon decades here. And before we do get into the video, this is by no means financial advice. This is simply me coming onto the internet here, making a video, telling you guys what I did in terms of these stocks and how I feel about these stocks long term, and kind of my method when it comes to picking stocks for a long term portfolio here. So do your own research as always. If you find value in these stocks, hey, maybe you can buy them, but do not buy them because I'm talking about them. And if you guys find value in this video, hit that like button for me and consider subscribing to the channel, and let's get right into it, starting off with stock number 1, which is good old Microsoft. This is arguably, it is, in my opinion, the most diversified tech stock out there. When we're looking at Netflix, when we're looking at Apple, when we're looking at Amazon, Facebook, Microsoft has a lot more kind of developed segments to its business than these other players. And let's just jump right into their website and take a look at these different segments so you can get a better understanding of what their business does and how it's extremely diversified. So we can see here their first segment is productivity and business processes. This is anything from Office commercial, including Microsoft Office 365 subscriptions. They have LinkedIn, including talent solutions, marketing solutions, premium subscriptions, as well as Office 365 subscriptions and Office licensed on premises. Then they have the intelligent cloud. This is arguably the most attractive part of their business, with server products and cloud services, including Microsoft Azure, Microsoft SQL Server, Windows Server, Visual Studio, and many more. And when it comes to personal computing, this is another massive part of their business, which includes gaming, Xbox hardware and Xbox content and services, devices including the Microsoft Surface and PC accessories, Xbox Live transactions, subscriptions, and mind you guys, the new Xbox is coming out here, I believe, in the next couple of months, within the year, and I forget what it's called, but I know for a fact many gamers are going to take their Xbox One, trash it, and then go to the new Xbox, because that's what gamers do, me included, guys. Although I'm not the biggest gamer out there, I do enjoy Call of Duty, I do enjoy NBA 2K, Madden sometimes as well, so I'll probably step up and buy this new Xbox as well. So taking a look at their segments, they're pretty diversified. They have hardware and hardware that's not going anywhere, such as PCs, such as the Xbox. They have the cloud service, Azure, which is growing very quickly, and from my memory, I believe they are growing quicker than Amazon's cloud service, which is the other big competitor in the space. And of course, the subscription model from Office 365 products, that's a very good model to have for recurring revenue. I think it's fantastic. And when we take a look at their dividend, which at this point, since the stock is pretty high in price, is not too attractive, but still it offers some long-term potential, especially for those that are looking to hold long-term like me, since I'm never selling, at least at this point. With these fundamentals, I'm never selling the stock, right? So let's take a look at their dividend. So taking a look at Seeking Alpha here, which is a website that I personally use to do research on different stocks here, and by no means are they sponsoring the video. That's just me being completely honest. We can see Microsoft has a forward dividend yield right now of 1.14%. Again, that is nothing crazy whatsoever. Their annual payout is $2.04. Payout ratio ratio being 36%, meaning they're paying 36% of their earnings in terms of dividends. So that does seem sustainable. And the awesome thing is, yeah, they're not paying a solid current yield at only 1.14%, but they are growing their dividend at quite the nice rate here at 10.45% over the past 5 years. And they have notched in 16 years of dividend growth. And of course, as Microsoft continues to grow, it continues to gain market share in these different segments, and it continues to make money, these dividend numbers, they're going to get more attractive. At least that's what I hope for, as I'm a long-term investor in Microsoft. And although it is overvalued here, guys, I'll be the first to tell you, this stock is not one that I'm buying now. As a matter of fact, none of these stocks I'm buying now. I'm not buying these stocks now due to the valuation they're at, but that doesn't mean that I'm selling them. I'm simply holding them and reaping the rewards from the cash flow and the future cash flows that I believe these companies will be producing. So let's get into the second stock right now. So the second stock is none other than Johnson & Johnson, the healthcare giant. This is a company that's split into 3 segments: medical devices, healthcare, and consumer products. And many of you guys know a lot of their consumer products, and I'm sure if you have children, you've used their baby line, and if you're just a person in general that, uses skin lotion, skin products, over-the-counter stuff, you've definitely used a lot of their other products as well. So before we talk about why I like Johnson & Johnson in particular, let's talk about what products do they offer here. So if we're taking a look, we can see Johnson & Johnson offers the Band-Aid products, which, Band-Aid, that's a huge brand. Tylenol, Children's Motrin, Benadryl, Aveeno, Zyrtec Children's, products such as Listerine, Benylin, Rogaine, and the list goes on. So in terms of their consumer products, very diversified, and obviously they're a healthcare beast. They deal with a lot of drugs as well as medical devices, which of course you can do a lot more research into those for yourselves. That's not the purpose of this video. So why do I like Johnson & Johnson? Okay, when I'm looking at long-term stocks for my long-term portfolio, I'm asking myself a couple of questions. Will these companies be able to weather storms? Will these companies be able to make it through financial disasters, kind of like what we're in right now with the whole CV, with this whole global crisis that we're experiencing? And when I look at Johnson & Johnson, when I look at Microsoft, and when I look at this third company we'll be talking about, all of these companies, in my opinion, are going to be able to weather the storm. In fact, Johnson & Johnson, guys, believe it or not, they just reported earnings a couple days ago. They just increased their dividend. While other companies are cutting dividends, firing people, losing a bunch of money, kind of like these cruise lines, the airlines, the hotel stocks, the cinema stocks, the movie theater stocks. While all these companies are almost on the verge of bankruptcy, Johnson & Johnson is actually increasing its dividend based on its last earnings report. They increased the dividend from 95 cents per share up to $1.01, and that is a 6% increase, guys. That is absolutely incredible. So a company like Johnson & Johnson, not only do they provide essential products that people need on a day-to-day basis, but they also provide cash flow, and they have a lot of cash reserves to fuel the company through rough time periods like this. And if we dive deeper into their dividend based on Seeking Alpha here, we can see a lot of the attractive dividend numbers. Forward yield right now is pretty solid considering the stock is near all-time highs. It's at 2.66%. The annual payout is about $4.04. Payout ratio right now is 52%. 50%, so that is a solid payout ratio there, with the 5-year growth rate being 6.32%. And take a look here, guys. The dividend growth is 57 years, meaning it is a dividend king. Any company that's increased its dividend for 50 plus years is considered a dividend king, which is another reason why I love Johnson & Johnson and never plan on selling it from my portfolio. So now that we talked about the second one, let's get into the third stock here, which we got a lot of good news over the past week about this company as well, and that company is none other than Procter & Gamble. And you'll notice, guys, these companies aren't the fanciest of stocks. They're not glamorous. They're not like Uber. They're not like Tesla. They're not like Shopify, stocks that are just flying up hundreds of percent. They're more conservative companies that, again, I'm holding for the long term here in retirement accounts, such as my Roth IRA, and in other accounts that are just general long-term accounts that I have here. And truly, guys, I don't plan on selling these anytime soon, again, if ever, unless the world just collapses and zombies take over, aliens take over. I'm not selling these stocks. So when it comes to Procter & Gamble, let's take a look at some of their products, and then we'll get into some awesome news we received about their organic sales these past couple of weeks. So we can see here on their website, based on consumer products, Procter & Gamble is a lot more diversified than many companies out there, and honestly more diversified than Johnson & Johnson when it comes to their consumer products. But that doesn't mean they're better than Johnson & Johnson. I'm just saying when it comes to their arsenal of consumer products, they have a lot going for them, from baby care, fabric care, family care, feminine care. Take a look at all of these products. You have Gain, you have Tide, Bounty, Always, right, for the women out there. Braun, Gillette, you have Gillette Venus, you have Aussie, Head & Shoulders, Herbal and Essence, Old Spice, Pantene, Cascade. These are companies, or rather products within the company that most people out there use every day, every single day. You have Crest, Oral-B, you have Scope, you have, Clear Blue, some, Pepto-Bismol products, Vicks right here, Gillette, Native, Olay, and the list just goes on. So when it comes to Procter & Gamble, this is really a play on the consumer staple side, right? This company provides products that people will need whenever, whether the economy's booming, whether we're in a time period like this company provides products that people will always need. It's not like the what's that company? Pentatonics? No, that's the singing group. The Peloton. This is a bike that's $3,000. People don't need this when the economy is crashing. Of course not. They don't need that. And even when the economy's booming, I wouldn't recommend somebody to buy a $3,000 bike. Come on now, right, guys? So you get it. PG provides essential products, and we'll talk about some numbers here. And as I'm glancing down, I'm looking at my computer. We'll talk about some numbers here that are just insane. So when it comes to Procter & Gamble, organic sales rose 6% in the fiscal quarter 3 here to top the consensus mark of plus 4.8%. Organic sales in the healthcare segment were up 9% during the quarter, and the baby, feminine, family care saw a 7% increase. Organic sales were down 1% from the grooming business. I guess guys aren't shaving as much. Organic shipment volume increased 6% during the quarter as strong consumer demand in North America and certain European markets due to the CV was partially offset by volume decreases in certain Asian markets. And PG, take a look at this, guys, adjusted its outlook for full year all-in sales growth for 2020 to be in a range of 4 to 5% versus a prior range of 3 to 4%. So as companies, many of these companies are decreasing their outlooks. Well, Procter & Gamble, they're increasing their sales outlook, which is absolutely incredible and honestly a factor in me holding them long term because, again, they're essential during whatever time period that we're in. And let's take a look at Seeking Alpha for Procter & Gamble, see kind of what their dividend is looking like right now. So as of right now, the company near all-time highs, like many of these companies are. Dividend yield is 2.54%. Annual payout is $3.16, with a payout ratio at about 63%, a bit higher than J&J and Microsoft, but still, that's an acceptable range there. And the 5-year growth rate, not too crazy, but still growing at 3.13%. And another awesome thing about it, just like Johnson & Johnson, it's a dividend king, guys, growing its dividend for 63 years at this point, which is an awesome thing to look for in a company that I'm holding long term. So that's pretty much it for today's video. Those are 3 companies, which again, we didn't dive too deep into them because that would take about an hour to do, even more, but that's just a little bit about the company, so you can go out deeper and look into them and maybe take some of this analysis and kind of apply it to other stocks that you are looking at. And if you guys enjoyed the video, as always, hit that like button for me and consider subscribing to the channel if you want to see further content like this. And if you guys actually want 2 free stocks from Webull valued up to $1,400, you can actually use my affiliate link down below in the description box. All you have to do is put in $100 and you'll get those 2 free stocks valued up to $1,400. So thanks for watching, guys. Stay safe out there as always during these crazy times that we're living in. Thanks for the support as always. Peace out.